Getting rich through investing is rarely about luck, timing the market, or chasing the next big trend. In reality, long-term wealth is built through patience, consistency, and a clear understanding of how money grows over time. Investing works not because it is exciting, but because it allows money to compound and create wealth gradually. Those who succeed are not usually the smartest or boldest investors, but the most disciplined. First, it is important to understand what getting rich through investing really means. Wealth is not created overnight. Investing makes people rich slowly at first, and then suddenly, after years of compounding. The goal is not short-term profit, but long-term financial independence. Having money that works for you instead of relying solely on earned income. Most millionaires did not achieve their wealth through a single lucky investment, but through decades of steady investing. Before investing can even begin, a person must have money available to invest. This means income comes first. People cannot invest what they do not have, which is why growing income and controlling expenses are essential. By earning more than they spend and creating a surplus, individuals create the capital needed for investing. Saving alone is not enough, but it provides the foundation that allows investing to happen consistently. Time plays a crucial role in building wealth through investing. The earlier a person starts, the more powerful compounding becomes. Compounding occurs when investment returns generate their own returns, leading to exponential growth over time. Even small, regular investments can grow into large sums if given enough time. Starting early matters more than investing large amounts later, as time amplifies the growth of invested money. Successful investing also requires focusing on real assets rather than hype. Wealthy investors tend to favor long-term assets such as broad stock market index funds, established businesses, and real estate. These investments generate returns over time and benefit from economic growth. In contrast, speculative trading, get-rich-quick schemes, and constant buying and selling often lead to losses. True investing is built on ownership, not excitement. Consistency is another key factor in becoming rich through investing. Instead of trying to time the market perfectly, successful investors invest regularly and stay committed during both good and bad market conditions. Market downturns often scare people into selling, but long-term investors understand that downturns are temporary and can even present opportunities to buy assets at lower prices. Staying invested during uncertain times is essential for long-term success. Reinvesting earnings is especially important in the early stages of wealth building. Dividends, interest, and investment gains should be reinvested rather than spent. This accelerates compounding and allows wealth to grow more rapidly. Later in life, once a strong investment base has been built, those returns can then be used as income. Building wealth through investing requires delaying gratification and prioritizing long-term goals over short-term comfort. Managing risk wisely is also critical. Smart investors do not avoid risk entirely, but they control it by diversifying their investments and avoiding large, reckless bets. Investing money that will be needed in the near future increases the chance of losses and poor decisions. Risk management ensures that no single mistake can wipe out years of progress. Ultimately, patience is the defining trait of successful investors. Many people fail, not because investing does not work, but because they quit too early. Wealth tends to reward those who remain calm, disciplined, and committed for years, even decades. While investing may seem slow and unexciting, it is one of the most reliable ways to build long-term wealth. So with that being said, getting rich through investing follows a simple but powerful formula. Earn more than you spend, invest the difference, focus on long-term assets, reinvest returns, manage risk, and stay invested over time. There are no shortcuts or secrets. Investing builds wealth not through speed, but through consistency and patience. For most people, the smartest move is investing in strong, well-established companies through broad index funds, like those that track the overall stock market. These funds own hundreds of profitable companies at once, reducing risk while capturing long-term growth. You don't need to guess winners or chase trends. By investing regularly in reliable, long-lasting businesses and holding for the long term, you give yourself the best chance to build real wealth over time. If this video helped you, please drop a like and subscribe, and I will see you in the next video. Peace.